resolves. Those in favor of the request, that's the prayer of the Minister of Finance for more time to do consultation with the leadership, 0. That's nil. Those against the requests of the Minister for Finance for more time for consultation with the leadership, 137. So the noes have it, and the request is accordingly lost. Now I proceed to put the question on the motion. The question is, those in favor of the approval of motion number 11 on the order paper, who says, and I read, that this Honorable House approves the budget statement and economic policy of the government for the year ending 31st December 2022. Those in favor of the motion say aye. Honorable members, clearly the noes have it. The motion is accordingly lost. Honorable members.
Well, we thought we should bring it back. That was what ensued in Parliament last Friday when the minority rejected the 2022 budget, obviously without the presence of the majority who staged a walkout. Now, government is expected to make some amendments to the proposed tax on electronic transactions. Joy Business is learning that the decision was taken even before last Friday's rejection of the budget. We understand that it was one of the resolutions reached at last week's cabinet meeting, and sources say government is considering scrapping the levy on inward remittances. Let's bring in Chief Finance Officer at the Valley View University, Dr. Williams, for some analysis. So, welcome. We are getting indication that there may just be an amendment to the e-levy. The government is considering that move. Do you think it is a good one?
Good afternoon to your viewers, and thank you very much, Daryl, for calling me. I think the decision by government to review the e-levy approach is in the right direction. As we see, government must find a way to be in line with what the other side of the House is saying. When it comes to the budget presentation and approval, cooperation and consultation are two important elements in getting the budget approved. If we look at what really happened, we could see that the finance minister request came at a very late hour. But as a country, if we look at the demands made by the minority, to them, they are saying that it will lessen the burden. And if government is now reconsidering the option to vary its e-levy, it will be in the good direction. And it will mean that now we have the cooperation now as a country and also in the House of Parliament to get this approved.
Well, so we know the introduction of the e-levy was to widen our tax net and boost revenue. So if they are reconsidering the e-levy, what else can they do to make up for it?
Okay, so if you really look at the computation done by the finance minister, the chunk of the money was going to come from the mobile money process, almost 8.7 billion cedis. I'm just giving this figure based on the 500 billion that was mentioned, that as at 2020, we got 500 billion. We are getting indication that in 2021, and we are around 900 billion. So what I think government can do is to look at the percentage, the charge. If government can reduce the charge, and then also find a way to set it on, have a base that it will be charged on. Possibly, I am thinking that the percentage should be charged on the service fee and not on the amount to be transferred. So let's say if I'm transferring 1,000 cedis, I'm supposed to pay 1.75%. So already I'll be paying charges to the telcos of 1%. Can we take a base on the 1% of that charge to make it the fee? If we look at the movement, government was still raking close to 5 billion. And that will not deviate from too much from the 8.7 billion government is expecting to raise in 2022. So though government, once government looks at that, come out that reduction, it will help. In the budget, there was also an important element that probably analysts, for me, I'm looking at. The minister brought an analysis of the tax contribution by regions. And it came to light that Ashanti region and other 3 regions are only contributing 3%. In fact, the Ashanti region is 1.3%. And Ashanti region has a population of close to 3.1 million. So if you look at Ashanti region, it's a region with a lot of informal sectors where government can use the enforcement process to make sure that a lot of taxes are paid by citizens in Ashanti region. If you look at it critically, the minister said 89% of the taxes paid are coming from Greater Accra region. And Greater Accra region is where we have a lot of formal sectors, formal workers. But the informal sector that we are saying that we want to bring them in, majority of them are in Ashanti region. And that is where we are not getting the taxes from. So I'm expecting that in the review of the budget, for it to be presented, the minister should come out with the enforcement strategy in the regional basis. I'm expecting the minister to say, we'll be able to make up for the shortfall in when they take away the bank transfers charge and the remittance charge. We are going to make it up because we are going to make sure that a place like Ashanti region, taxes are paid, Western region, taxes are paid. Because a lot of the informal businesses are going on in these regions, but the government is not focusing on that place to get the funds. Accra, Greater Accra region cannot only be contributing 89%. We should make sure that Ashanti region tax contribution in the country increases because the population sits on 2 main regions, right? Greater Accra and Ashanti region. So if Greater Accra is contributing 89, what is Ashanti region bringing? And for enforcement purposes, the minister must say that though we are going to reduce, maybe stop bank transfers, reduce the e-levy charges from 1.75 to say 0.5%, but we are going to make sure that the regional impact is seen in the tax collection.
And the difference, as you point out, is very concerning. And so something must be done about the informal sector and they paying taxes there. But final one, we're already picturing a worst case scenario where Parliament is not able to reach a consensus, which means government may risk a shutdown. I don't think we'll get that far, but what will be the consequence, Doc?
The impact will be that salaries should not be able to be paid if government doesn't get the policy approval. It was going to affect our interest payment because we need authorization to make those interest payments to our people who have borrowed from, and we know that, which is a critical factor. In fact, the signals from the international market, the increase in the use of Ghana's bond is also attributed to this factor that they are not sure if government will be able to generate the revenue or have the approval from Parliament to be able to make interest payment due in January. This is very, very critical. And that is why we have seen a pressure on the currency now, because a lot of foreigners who have their investment in Ghana, they are cashing out. And this is going to be a major impact. And just imagine if salaries are not paid, contractors are not paid. I mean, there might be a big problem in the country, and we need the two parties, the major parties in Ghana, to find consultation and collaboration to get this passed. I'm sure the government in power should not be rigid and insist that we will get our way through. Unfortunately, the numbers are not as in the past. So there should be a way of consultation and cooperation.
Thank you so much, Dr. Williams-Peprah, the Chief Finance Officer at the Valley View University. We'll be watching tomorrow what happens in Parliament when the lawmakers reconvene. But he talked about the local currency being under pressure. That's our next story. With barely 5 weeks to end the year, the Ghana CEDI has come under intense pressure and is being classified among African currencies with the worst spot returns. Is now ranked 14th among 20 top African currencies tracked by Bloomberg. Charles Nixon looks at Bloomberg's data and what has been transpiring on the foreign exchange market.
A combination of factors, including increased corporate demand for the US dollar and the exit of the country's bond by some foreign investors, have put pressure on the local currency. The past week has been worse as the local currency lost more grounds to the dollar. Bloomberg therefore put the depreciation of the cedi at 4.05%, though the Bank of Ghana data shows a lower decline in value of the local currency to the US dollar. Analysts want the central bank to up its intervention on the forex market to reduce the rate of depreciation as the foreign investors want faster pace of fiscal consolidation going forward. Here is senior economic analyst with Databank Research, MARTEY, who says there haven't been significant appetite for the government securities after the presentation of next year's budget.
In fact, our gauge of foreign investor sentiment around the budget shows that a lot of foreign investors feel like the faster pace of fiscal consolidation is necessary. However, they feel the revenue expectations are ambitious. And for that matter, they are very cautious on the outlook for the FX exposure they will take.
Meanwhile, the Zambian kwacha is the best performing currency in Africa so far this year. Nigerian naira is, however, 13th, whilst the South African rand is 19th with a depreciation of 19.28%.
Well, joining us to explain further is senior economist with Databank Research, MARTEY. Great to have you on the program this afternoon. So I remember, was it the beginning of the year when we used to tout the cedi as the best or second best performing currency on the continent? Courage, what is happening?
Yes, good afternoon, Daryl. Thanks for having me. All that has changed now and it's turned on its head. Now, again, going back to the beginning of the year to create context, like you said, during the first half of this year, we had significant inflows from foreign investors. And those inflows that came in, we estimate at about $1.1 billion US. Now, you can imagine what that would do to the supply side of for the foreign market. And that supported the cedi during the first half of this year. As we got into the second half of this year, inflation picking up, but then there's also the significant matter of foreign interest rate policy beginning to change. And foreign investors, seeing that development, started moving out because their funding cost has started going up. Because if they are to invest in Ghana, they will have to, those who have to leverage to invest in Ghana will be borrowing at higher cost. And so the funding cost is going up. So some of them want to cut their costs, their losses, and even redeem some of their capital. So in the month of September alone, we lost about $300 million US out of the $1.1 billion that came in the first half of this year. Now, in October, there was also another layer of risk perception, which is the concerns around Ghana's fiscal and debt sustainability. And that just deepened the sellout or the pullout significantly. So that at the end of October, the estimated amount of capital we lost was about $380 million US. Add that to $300 million we lost in September, that's about $680 million. About 62% of what we got in the first 6 months of the year, we lost in 2 months. That is a significant and instantaneous increase in demand for US dollars, and the cedi just came pulling down from that point. And even after the 2022 budget presentation, we haven't seen a significant improvement in the foreign investor sentiment. because of the concerns around the revenue expectation. So that's the financial market explanation for why the CEDI has moved the way it did. But there's also the real sector explanation, where we've seen that as we approach the Christmas festivities, there's always going to be increase in import demand. But also, as oil prices have been stronger so far this year, demand for dollars to bring in refined product is also high. So we see significant increase in corporate demand for US dollars, particularly from the commerce, manufacturing, and energy sector companies. So the real sector activity, which is leading to demand for foreign currency, is also piling more pressure on the local currency. So this is where we are today, given the financial market and real sector development that has impacted the CEDI's performance so far this year.
Well, the factors you talked about earlier, I don't see them changing anytime soon. So what's your projection as we head into a new year?
That's the concern, isn't it? Because they don't appear to be something that will change anytime soon. But you see, one factor we also need to look at is that, like your introductory video showed, there seems to be an increasing gap or spread between the retail FX rate and what is quoted on the central bank website. As at mid-year, the spread was about 2%. Currently, the spread is about 7%. We need to narrow that gap because that widening spread is creating the expectation of further depreciation to come, because it appears there need to be some convergence, and the market is expecting that the central bank rate has to move to converge with the retail rate. And so that uncertainty needs to be cleared if we achieve convergence. Now, things that can be done also would be, in the short term, monetary policy has taken the lead. First of all, we saw an increase in the policy rate last week, using interest rates to increase the appeal of CEDI and CEDI-denominated securities is one way, so that the pullouts can reduce because they are being compensated for with higher interest rates. Then you also notice that on the supply side, the central bank has increased the frequency of the forward auctions that it does. Previously, it used to be once every 2 weeks, but now it's been announced that it will be done every week, in addition to the spot market intervention. So the central bank is doing its bit to anchor the CEDI's performance. Now, that is not to prevent depreciation because we run a flexible exchange rate regime. So the central bank's intervention is only to prevent volatility and extreme, if you like, slide. But the currency will still depreciate in line with the fundamentals that we have, which is a high currency, the high fiscal deficit, and rising inflation.
All right. Thanks so much, Courage MARTEY, Senior Economist with Databank Research. We'll keep watching the currency market with you. Hopefully, we'll have a conversation in future. You're watching The Marketplace. We're taking a short break. We'll be right back. Hello, welcome back. The Ghana Chamber of Mines is calling on government to revive the Gold Museum Committee to unlock the value potential in the mining sector. Speaking at the 7th Ghana Mining Industry Awards, Chief Executive of the Chamber, Dr. Suleiman Akoni, said his outfit has commenced the fitting of a mini museum in the hope of propagating the prospects of the sector.
A whopping 2 million Ghana cedis in cash and data bundles will be rewarded to loyal customers. The
The Minister of Tourism, Arts and Culture inaugurated a committee to oversee the establishment of a gold museum. The rationale? To attract more tourists into the country, considering that Ghana has been mining gold for the past 100 years. Yet there is no historical trail of mining artifacts to satisfy the curiosity of tourists. Speaking at the 7th Ghana Mining Industry Awards, Chief Executive of the Chamber, Dr. Suleiman Akoni, urged government to revive the committee.
The Chamber commits to collaborate with the relevant authorities to unlock the country's latent socio-economic value in this subsector. In our own small way, the Chamber has commenced fitting its mini museum at its secretariat, which hopefully will be a teaser of what we can develop at a national level. In this regard, we wish to call on the Minister for Tourism, Honorable Dr. Ibrahim Awal, to revive the Gold Museum Committee, set up a few years ago to work assiduously to unlock the potential value in the subsector for our dear nation.
President of the Ghana Chamber of Mines, Eric Esubontin, disclosed some initiatives the chamber has implemented to address the challenges in the sector.
Ghana's mining sector is still a long way off in attaining its full potential. To address these gaps, the chamber has stepped in to find solutions in line with its objectives of providing leadership to the challenges the industry faces. These include, but not limited to, the establishment of standards for the local production of electrical cables, mapping opportunities in the mining supply chain in Ghana, arranging financing for supply chain participants, and last but not the least, commissioning and funding a study into how we can deliberately position Ghana as the hub for mining support services in West Africa.
Meanwhile, co-chair of the Ghana Extractive Industries Transparency Initiative, Dr. Steve Mantiao, applauded the nominees and awardees for their hard work in making the mining industry a positive reference point.
We are here once again to join our hearts with these outstanding personalities and companies among us in the pursuance of excellence to make the mining industry in Ghana a positive reference point for other mining destinations. On behalf of the members of the adjudicating board, I congratulate all companies and individuals, including students.
Well, a final one for us this afternoon. Vodafone Ghana has launched a new promotion christened the Ecosu promotion. The new campaign is expected to bring a touch of magic into the lives of customers. Here's more.
A whopping 2 million Ghana cedis in cash and data bundles will be rewarded to loyal customers. The promo that will last for the next 3 months is to ease the pressure on the effects of COVID-19 on customers of Vodafone as the festive season sets in. Here is the customer segment manager, Dennis Ewua.
Big day for Vodafone Ghana. We've launched the biggest consumer promo to ever hit the Ghanaian market. It is the Ecosu promo. Today, we have duly launched it. As we indicate, the promo is very simple. There's no opt-in. You don't need to subscribe to the promo. There's no chance. It's not a chance game. It's open to every consumer. The consumers only do the basic activity he does every day, which is topping up, recharging. Once you recharge, you build your red coins, and with your red coins, you can redeem airtime, data, and cash. So very simple, no complications in this promo. At Vodafone, we believe the consumer has the power. We believe in the power of giving to consumers. And it's Christmas, and this is our way of saying thank you to our consumers for staying with us through all this period.
He also explained why the campaign is different from other promotions.
What makes the promo unique is that, as I said, the customer does not have to subscribe. From today, every customer, once you dial *533#, you see the coins that you have. And every consumer, as of now, so far as you have recharged over the last 1 month, you have coins. So a customer can even redeem today, as we speak. Just dial *533# or go on my Vodafone app, and you can redeem airtime, data, or cash today. This has never happened. There's no barrier a customer has to hit to enjoy this promo.
Customers have equal opportunity to tap into the jackpot and win without any draw or chances. They will have the chance to recharge their accounts through vouchers, Vodafone Cash, or credit transfers to earn more points to join the promo. James Eshen's report for Joy Business.
Well, that's the marketplace. Thanks for watching, everyone. More news on our website, myjoyonline.com. Goodbye.